Hey, folks, welcome to, pardon me, episode number 12 of the What the Futures podcast. Hope you're having a great, positive Friday. Of course, the show is brought to you by John Deere. John Deere, we appreciate your support. I'm going to continue to talk about Harvest Profit, which is a great online software you can use to help with your 2024 crop planning, helps keep you organized, gets all your financials in one spot. And I want to highlight it once again today, because I know that 2024 crop plans are very much up for debate right now. Harvest Profit has a what if scenario. It takes literally seconds to create a what if scenario of different crop types, different crop mixes. You can make multiple scenarios, see what numbers pencil out the best for your farming operation, and present those to your banker. Again, Harvest Profit, part of the John Deere umbrella here. And again, John Deere, we thank you for the support. I have a packed show. I've got David with Marketplace Commodities. He's going to join me shortly. I've got James with the CMN Group, that's Crop Management Network. We're going to talk all things fertilizer. And I also have John with Ag I3. He joins me a little bit later on in the show here as well. So welcome aboard. Positive Friday. We've got a positive moment for the week for myself. Well, maybe it's a little bit selfish. It's not trying to make this a brag here. But we bought a camper this week, a used camper. All right. It's not brand new. It's a 2016. But it's got the bunk beds. It has a little slide out, and finally a bed, a queen bed that I can sleep on. We love camping. Okay. But with the kids, we wanted to upgrade here a little bit. And I've been looking at campers for like a year, and they just kept dropping in price. And so finally pulled the trigger on a deal this week and have upgraded. We had like an 85 Prowler, and then we went to a 2004 Pioneer. Now we've got the 2016. And with any luck, I'll have to upgrade my truck as well. Fingers crossed. We'll see. All right. That's it for positive moment of the week. I continue to look for a couple of farmers to come join me on the podcast. Of course, we'll record this from the comfort of your home or wherever you are. But I've got a volunteer from Saskatchewan. I'm still looking for Manitoba and Alberta and the Peace region. So hit me up, Ryan, at whatthefuturespodcast.ca. And I would love to get a few more people for our roundtable discussions for throughout the year. So if you want more details, send me a note and I'll get those over to you. Of course, you can interact with the show many different ways. And one way is through our text line at 1-855-606-1889. That's how you can get entered to win, potentially win a trip to Nashville for two people. All you have to do is text Nashville. That'll get you entered. We'll draw for that later in March. But it's, of course, sponsored. The text line is sponsored by Pioneer Seeds, our friends over at Tower Farms, Jacob and Becky. And we're going to give away another bag of P516L right behind me here. Another bag next week. So all you have to do is text that number. You get entered in to potentially win this bag of canola seed next week. You also get entered in to potentially win a trip for two to Nashville, Tennessee, Music City later on in March is when we draw for that. All right. Of course, we're on Facebook, Instagram, X, YouTube. Find us at whatthefuturespodcast.ca. That's the website. And like or subscribe. It helps me out, makes the show more relevant. And with that, keeps us more relevant as well. So appreciate all the communication. And again, a few emails from growers, a couple text messages. I know the last couple episodes, they were, tougher, I guess, when markets are bearish. They're tougher to record and to hear. But I do appreciate the feedback and the comments and the interaction. And if I can help in any way, I certainly like helping as well. All right. Now, I wanted to talk about basically some content here that's I'm a little bit sensitive towards. Okay. And I'm sensitive towards it because I myself have been involved in some of these contracts, and they have turned out in some scenarios, not great, even horrible. Okay. So these are these fancy contracts. What happened today is that that Bungie sent out a message, and I'm not picking on Bungie here, but they sent out, it was about an accumulator. So it was how does 14.99 canola for June July delivery? How's that sound? Call the office, ask about an accumulator option structure that can net you that 14.99 a bushel. Okay, that's fine and dandy. But I want you to just be a little bit careful. Okay, so let's set this up real quick. Farmers reluctant to sell much. Grain farmers, grain companies trying to be creative. They could improve basis and get you a better cash price. That would be good. That would help. But trying to figure out how to buy those bushels that you don't want to sell. And they get to these numbers that psychologically feel just a little bit better. Okay. But there's a catch. Remember, nothing is free. Okay. So hello, Mr. and Mrs. Farmer. I have a deal for you. I'm going to give you 20, 25, 30 cents a bushel, better than the posted bid. A nice shiny number, but I want something in return. And what I want is more bushels. Okay. Now, these contracts, they have all different names, all different brands. It can be called an accumulator. It can be called a premium offer. It could be a bonus offer. They've got all sorts, and they change the names on them all the time. And I can't speak for what this accumulator is even going to do. But when you're getting that premium, just make sure you know what's on the backside of this contract, because usually you're committing more bushels at a set price. Now, this works in a declining market. Don't get me wrong. The market trades lower. You're probably fine. Again, seek the advice of a professional. But if the market rallies, which is my experience, it has been my experience, it's ugly. It's never 25 cents a bushel. It's never I commit and get 10 or 25 cent premium and it triggers and I'm only 25 cents out of the market. When it triggers, I'm usually a buck or two or five out of the market. That happened back in 2020, 2021. I've had this experience further back in my career. Those of you that would have worked with me, there's a couple of you shaking your heads right now saying those darn contracts, right? Because we experienced it a couple of times. And sometimes the juice isn't worth the squeeze, if that's the saying. So just be careful. Know what you're getting into. And they're playing on your psychology. They're playing on the emotion of getting that better price. But what are you tying yourself into? And make sure you have the paperwork. Make sure that everybody's accountable. The farmer, the grain buyer, everybody needs to be accountable to what you're signing and what you're signing up for. Know what you're signing up for. And make sure you're comfortable with the back end of this. Okay? I know you're good with the front end because you're agreeing to it, but what's on the back end? And make sure you're comfortable. Because if it triggers, there's a very good chance the market is higher, sometimes significantly higher. And honestly, folks, I'd rather see you sell your grain and buy calls or something like that, something that just opens up your upside than get caught in some of these strange contracts that happen out there. So anyways, folks, that's my soapbox here for episode 12. Let's turn it over now. I'm going to get David Lee's going to join us. We're going to talk to David, like 3 in a row. David, James, we've got John. And at the end, I'll just give you a little bit of news update if we've got anything to talk about there. And we'll get to our veggies at the very end as well. All right, folks, let's turn it over to David Lee. All right, I've got David Lee with Marketplace Commodities joining us here once again. If I recall, David, the last time we connected, there wasn't a lot of positivity in our conversation when it came to prices. So
let's see if we can do a little better today, Ryan.
I have my doubts, but we'll see. We'll see where we get. So I know you've been traveling to a couple of farm shows. It sounds like you've been out and about a little bit. Why don't you tell us about your travels? What are you hearing? What's the hot gossip out there, and what could you share with us?
Sure. Well, I don't know about hot gossip, but we can certainly give it a go here. Marketplace Commodities, we've been attending and doing more business out of, our proximity here in Lethbridge is very close to Montana.
Mhm.
So I recently attended in Great Falls, Montana, what's called the Maggie Grain Conference there. It's very much like an ag expo. We did attend another one back in November as well. And, the message is quite similar down there.
Okay.
They're, the sellers on barley. I mean, I'm mainly a feed grain trader, so they do a lot more malt barley down there, and so our main products that we'll buy out of the U.S. are if the malt barley is rejected, or it's low protein wheat. In those scenarios, it'll come up here into the feed market, and quite surprisingly, they have had some issues with their barley, and we've been seeing barley come up here even at these levels, which surprises me.
Okay.
You quote a guy $4 a bushel at the bin, US dollars a bushel at the bin, and they're not very excited about it, but they generally do. I came back and I was surprised to see quite a few contracts entered in and around those levels. And so
Sure.
I did hear that some of the larger companies like CHS and a few of the larger grain companies have had challenge shipping their barley down into Mexico.
Okay.
And actually, because of the issues with immigrants and whatnot jumping on the trains, they've had to back that off for probably the next 1 to 2 months. And so from that, we actually have seen an increase in barley coming up here, and even a few of those larger companies selling some of their spot positions. And I think that has kind of put a little more pressure on the feed market lately. It's kind of pulled cash Lethbridge from maybe a little above $300 a ton to a little below $300 a ton, which interestingly enough, the last time that we spoke, I was a little concerned about that.
Yeah.
And it looks like that has happened. So anyway, but yeah, interesting to be on the other side of the border for sure.
Yeah.
They kind of have a different perspective on their marketing than we do. So
Sure. Yeah. Yeah. Similar proximity, still slightly different worlds. I know we chatted on the phone a couple weeks ago, and we were talking about selling. Are you seeing, is farmers selling pretty quiet right now? Is it picked up lately? What's going on the selling side for Western Canadian growers?
yeah, Ryan, it's I would call it relatively slow on the Western Canadian side.
Yeah.
And usually that would be a signal that you would be getting close to a market bottom. And it might be, I don't know. But I just haven't seen an increase in demand to come in either. Like, let me give you an example. So this week, getting near the end of the month, as traders, we're trying to shore up positions to see who of our customers still needs to take grain. And probably 95% of my calls this week have been trying to get guys to take their grain.
Oh, okay.
Not pulling contracts early. We had a good cold snap for 10 days. So I thought, well, maybe guys will clear out some of their storage, and I'll get those phone calls coming in saying, "Hey, David, can you add another 10 loads for next week?" Unfortunately, it's still been the opposite.
Okay.
Which concerns me a little bit, because now next week here in Lethbridge, we're looking at moving into double-digit plus temperatures again.
Right. Yeah.
And so, there may be demand that comes in. It just hasn't come in quite yet.
So we have Western Canada slow to sell, slow to move.
Yep.
Overall, just very quiet. Willing participants, more willing from the U.S. to make sales, if anything. And so where are we trending right now then for price? Is it still working a little bit lower this week or staying kind of
Yeah.
quiet?
So right now in Lethbridge anyway, for barley, we're seeing it trading in and around like the bids are somewhere in and around $285 a ton, which is about where we have our bid today. And they're, the offers that we're making are anywhere between about the low 290s to mid 295s. If you go out to springtime, I might call it more of like a 290 to 295 market. There
Okay.
really isn't a lot of carry. I was told from one of my end users today they had offers lined up from the line companies at around a 297. So, and that's for the springtimes for like for a April, May, June, July timeframe. So,
Okay.
guys are really trying to get ahead of the market, so to speak. Usually, grain companies like myself are very reluctant to sell forward into the April, May, June, July, and I am reluctant. I
Mhm.
but if you miss out on the volume, it's tricky to get that in later
Yeah.
if a lot of the space gets taken. But at the same time, I am worried because I'm not seeing a lot of the, like you say, the Western Canadian farmer participation in this. So
Yeah.
it makes for some slow days.
Yeah, for sure. Is there anything that maybe stands out from a better price perspective right now? Anything you trade that is getting a little bit of action or is looking a
Yeah.
little better?
Yeah, like for example, I've chatted with you a little bit here on the soft white wheat,
Mhm. Yep.
particularly like a little better grade soft white wheat that would make a number two spec. You can still at the bin get, kind of that $8, maybe call it 8 to 8.25, just depending on where you're located,
Sure.
kind of at the bin values. The wheat basis has remained actually quite steady, I would say. In
Mhm.
fact, it's strengthened in the face of declining futures, and we've seen that on milling hard red spring all the way into feed wheat. Like in Lethbridge, if barley is trading, call it 290 today, feed wheat I would say is 315 to 320. So we're seeing quite a spread, a $30 spread, which normally we see about a $5 spread. So
Right.
so that basis on wheat, if it was me and I had wheat to sell versus barley, I might lean a little bit more toward the wheat right now myself.
Yep. Yep. Fair enough. That lines up with some of the comments I had last week as well. How about for new crop in when you chat with growers in like the southern part of Alberta or Saskatchewan, when it comes to acres for 2024, are you seeing anything that stands out from an acreage perspective, like a whole bunch of something or way less of something else? Does anything really stand out yet?
Not so much. I have seen, um, I have heard talk with the barley prices being under pressure like they are, maybe
Hmm.
not as much barley going in. I've heard that.
Hmm.
There's definitely concern, like the snowpack levels out here in Alberta are still. I mean, we've had a great snowfall recently here,
Yeah.
uh, and I was looking at the snowpack charts in the mountains. We're still under that two standard deviation line. Um, we still need quite a bit more moisture,
Yeah.
and and that's not just saying that, oh yeah, it comes later in the spring, because this is looking at it over time. So, as of right now, compared to previous years, right now, we are
Mhm.
still well below.
Okay.
So, if that continues, I think there's two scenarios here. If we get to April and we haven't seen some more significant moisture, I think that does set the stage for maybe being the story that creates a bit of a rally myself. So if there is a silver lining, that's probably the silver lining right now.
Hmm.
If we can, if all of a sudden we do get some serious moisture and we even get above that lower two standard deviation level, I think the rally could be fairly muted even into the springtime with some of this forward selling from the grain companies I've seen.
Yeah. Yeah. Fair enough. Okay. That's great perspective. Anything for new crop bids that stands out on, anything for next fall?
Well, with the snow, I mean, we have seen them moderate a little bit. They were in Lethbridge here, they were up in and around the 315 level to start the year.
Mm-hmm.
Then like a week, call it 2 weeks ago, just before the snow came in, I had bids in the 308 level.
Okay.
And today they're probably hovering in and around the 300 level.
Okay.
So we have seen them moderate, but they're still probably $10 over old crop spot bids, which is unusual. Generally, we see new crop trading or bids $40 to $50 under old crop.
Yep.
So there, that says to me there is still concern over the moisture levels.
Fair enough. Okay. Awesome. Well, lots of great information there, David. Glad you had a great time down in Montana. Yeah, and next time we have you on the show next month, maybe there'll be something really exciting and bullish we can talk about. You never know. So we'll see. But
you betcha.
Appreciate you coming on. So take care.
Yeah, thank you very much, Ryan.
You bet.
Take care.
All right, folks. So as David said, looks like barley values are just kind of struggling along here. Wheat prices, wheat basis staying firm, even improving a little bit. From a price perspective this week, I know I updated you on Tuesday. A lot changed. I noticed that spring wheat bids, CPS red bids, those strengthened a little bit. Spring wheat futures finally, shouldn't say finally, but working above that $7 futures, March futures level. And with that, we did see some targets hitting across the prairies. I know that we saw stuff around the 9s in a lot of areas. Not every area, but a lot of areas. Unfortunately, canola is on the decline here. A big steep drop today, down about $10. This after a flurry of activities on the recommendation side, multiple firms making old crop recommendations and even some new crop recommendations as well. And here pulling back about $10. The trend remains about the same, folks. It's not a whole bunch upside and certainly on the downtrend. I haven't seen anything that really stands out towards the end of the week here on canola prices. I think that's about it from the price perspective here. So now let's change gears. Let's talk fertilizer. We have a new guest joining us, and I will let James take it away. All right, folks, I am happy to welcome our next guest in here because he is a wealth of knowledge when it comes to fertilizer markets. And if I just put a couple of thoughts together here real quick, crop plans are a little bit in flux. Commodity prices trending lower. I'm wondering if there's a lot of farm decisions that need to be made yet when it comes to fertilizer. So without further ado, I welcome James Mitchell from the Crop Management Network. James, welcome to the What the Futures podcast.
Yeah, thanks, Ryan. Really appreciate you having me on.
Yeah, you bet. I believe, James, back in my consulting days, did you do a grower presentation for me at a golf course?
Yeah, at the Coal Creek Golf Course, you bet.
Yep, that is a great track. If anyone's listening and wants to get a great round of golf in, just head a little bit east of Edmonton, a little bit north of Camrose, and there's a great track there at Coal Creek. All right, James, we have a lot that we could talk about here when it comes to fertilizer. You're the expert. You're the one with all the knowledge. Why don't you do a quick little intro of yourself and your company, and then we'll get into it. So tell us about you.
Sure. I'm the CEO of the Crop Management Network. We're an independent retail chain in central Alberta with 12 locations. Been in business since 2007.
Awesome.
And we're also a joint venture with Solio Agriculture.
Okay. Awesome. 12 locations, so keeping you busy and on your toes. I know you've done a lot of investment in the area as well over the last number of years. So very efficient facility. So that's great to see. All right, let's get into fertilizer. Where do you want to start? I'll turn it over to you.
Sure. I think the theme of fertilizer right now, and I'll talk specifically to phosphates, is there is a big concern about getting enough phosphate into Western Canada before spring.
Okay.
We've seen grower deferral, obviously with crop plans in flux, as you mentioned, commodity prices trending down, growers not feeling there's the value in stepping in and locking in the price now. But spring is coming closer all the time. We're 45 days to D-Day, really, for a retailer to have positioned product in hand.
Right.
So we have a lot of work to do on phosphates. There's not a warehouse in Western Canada that's full of phosphate right now, I would say.
Okay.
And we're seeing delays on our part from rail coming up from the US. And obviously, no more phosphate production in Canada. So we're totally reliant on imports now.
Right. Anything from like a logistics perspective here lately and over the last number of years even, it hasn't been easy. Look at all like the conflict going on around the world and the major transportation hubs or seaways or waterways. Everything is under attack, or there's pain points or stress points there. And so phosphate is kind of feeling that right now from what you're telling us.
Absolutely. We have had lots of domestic, and when I say domestic, U.S. production issues. Multiple suppliers, I think, are still feeling the pain from COVID and not having their plant maintenance up to snuff. So every supplier in the U.S. has had some plant problems. You throw that, the U.S. has a countervailing duty on imports from Morocco and Russia. They're not directing product at the U.S. anymore. So trade flows have had to try to refigure themselves. And right now, honestly, North America is the most expensive phosphate in the world. We're paying upwards of $100 US short, more than a farmer in Brazil would. And that's strictly because countries with CVDs refuse to send product to the US until those CVDs are removed. And there's just a ruling late yesterday that's saying there's an appeal going on. And the first step of that appeal looks like the CVDs are going to be in place again for another year at least. So there's going to be pain in place for phosphate for sure from today till the end of May. And then we will see a reset of phosphates, not as low as they could be without the CVDs.
Right. So if I'm hearing you right, and I know things can change, and as we tell listeners, we do our best with information we have today, but in your opinion, is there any benefit left to wait to book your FOSS, or is this something that you need to kind of speak for to get your product in place? Is there anything that just makes you think that it would make sense to wait yet?
Absolutely not on phosphates. No, I mean, we had issues, and several of issues of retailers running out of phosphate last spring. In central Alberta, we were able to step in and help a number of growers to get through the spring, being as their retailers just logistically didn't have it or couldn't get it to themselves. So, and this year's shaping up to be worse, and quite a bit worse.
Okay. Well, folks, if you need to pause the podcast right now and make a phone call, go for it. But appreciate that, James. How about nitrogen? What are you seeing on the nitrogen side?
Yeah, we've seen a lot of increases globally on nitrogen in the last 2 weeks. Middle East product is definitely leading the charge higher. Some of that's logistical costs because of the Red Sea conflict that's happening right now. But we are definitely seeing urea, all nitrogens trend higher right now, and it looks like they're going to continue to rise. I would say they're going to not be as high priced as in relativity to phosphate. Phosphate's going to take the biggest jump. Right? Urea will take the second biggest jump, but lots of delayed purchasing in North America again, and that's led dealers to withhold filling their sheds. And now we're getting close to spring. The U.S. needs to attract a lot of urea And the only way to do that is they're competing with other countries. So they're raising
Okay.
their bids at NOLA right now. So we're seeing NOLA track just about the 350 US a short. So when we're looking at import perspectives now, that's into the the lower 700s. So we're going to continue to see urea tick up. Domestic suppliers are going to obviously compete with imports, but it wouldn't surprise me if we saw urea retailing in parts of Western Canada for close to $800 by spring.
Okay. And that factors can change each and every year, but for prices to trend higher for urea now into spring, that's pretty normal, right? In some sense, to see prices track higher. So, yeah, I think that makes sense for me anyway. Um, how about this conflict in the Red Sea? Is that the big one then for fertilizer? Is it the Red Sea issues we have going on, or is there something else that is more important when it comes to logistics?
I mean, Red Sea is one factor of it. There's a lot of freight. I think 12% of the bulk freight globally runs through the Red Sea and the Suez Canal. So that's definitely, you're seeing ships either divert to go around the Cape of Good Hope, which adds 25% to their sailing time, or you're seeing insurance rates on vessels go up. So freight rates are driving prices higher, but for me there's never just one thing. It seems like everything just piles on when things go bad. And so in Western Canada, we've seen about 300,000 tons of lost production due to planned and unplanned outages at plants.
Okay.
Again, I think that's a lot of still playing catch up from COVID and maintenance issues that haven't been fully looked after yet. So you have that, you have the Red Sea issues, you have the issues on the Mississippi where they've been battling low water levels for the whole last year. So obviously those are higher barge rates, lower drafts, so they're not hauling as much per tow. So, and there's a lot of urea left to place in the US in inland terminals, and they have to wait for river open, which is typically in March sometime, but they can have high water, they can have low water, they can have good navigation. So in my opinion, it's the deferral has been going on, and there's a lot of decisions that still need to be made, but at some point as a risk manager, you have to start considering whether I can get it or not. And as a dealer, we're seeing signs of a large correction coming out of spring. We're going to manage our inventories extremely tight, so we're not taking write-downs at the end of season.
Right.
So it's all it's stacking up to be an interesting spring.
It's that trying to figure out that balance, right? And yeah, if you're going to see that correction, or you expect potentially to see a correction, it gets tough for everybody for sure. So the U.S. has to attract more tonnage, more urea. Like where would they get that from? Like who's going to export that to them?
Well, the U.S. is a big buyer of Russian urea, which obviously is excluded from Canada. Our government has a 35% tariff on Russian urea. So that's not coming to Canada. Okay. But, they're going to attract Middle East tons. So Saudi Arabia, Qatar, who else here? Oman, Algeria, Saudi Arabia. So, all of those producers could be impacted by what's going on in the Middle East right now. It's a very volatile place. And, it seems like more times than not, there's conflict in the Middle East. I did a research, and I went back to 1902. And from 1902 today, there's been documented 70 conflicts in the Middle East over oil, over human rights, whatever you want to call it. But, it's a very volatile place, and they represent 50% of the world's exportable urea. And it's more often than not, they're going to influence a price direction.
Yeah. I'm really not hearing a lot of reasons for prices to drop here in our conversation. So, that group is, there's definitely some volatility there. Okay, let's turn the tables a little bit here. If we've got, how about spring logistics for us in Western Canada? We have to get the product in place, of course, but anything from a logistics standpoint that you can touch on here in Western Canada?
Yeah, sure. Last year it felt like for our retail group, and we have our own trucks, by the way, so we try to minimize any interference with our business. But last year felt like the ELD and some of the rules of service or hours of service the trucks have to maintain really bit last year because truck logistics was horrible. And when I say horrible, there wasn't enough trucks to move the product in time. Now, a lot of Western Canada all was seeding at the same time, but lineups at the plants were crazy, like 8 hour lineups. So you're eating up 60% of your hours of service in a line, not even driving. And Alberta finished earlier than than Western Manitoba, and we ended up at the end of the season sending our trucks out to Manitoba to help dealers out there, and we've never had to do that before.
Yeah.
So the whole truck thing, I mean, we're seeing less drivers all the time. Demand is still rampant for truck freight, so logistics are getting tighter all the time, and less truckers. It's a problem.
Yep, you bet. Couple more from me here as well. So do you have a sense overall if farmers in your region, do they have their fertilizer kind of booked right now? Do you have a sense on what that number could look like? Is there a lot to book yet? Is it below normal? I'm feeling it probably is, but what are you seeing on that side?
Yeah, a little geography dependent, but as an average, there has been grower deferral. We're probably 15% less booked this time than a year ago. So there's a lot of decisions getting made daily now. And I think, growers are recognizing spring's coming, and there's enough information on social media showing that prices are starting to trend higher. So there's going to be activity now. And I think kind of leads to the snowball effect too, because then inventories are going to get sold off. Dealers are going to look to replenish stocks, and I'll go back to phosphate again. It's very hard to come by.
Right.
For us to buy wholesale phosphate right now, there's not a lot of sellers.
Fair enough. Every time you go back to the well to buy, it's going to be higher and higher, it sounds like. Okay. What do you have for advice then for growers tuning into the podcast today? Any advice you'd like to share?
Yeah. Obviously, if you haven't bought yet, you need to make a plan sooner than later, and need to communicate with your dealer so they can get product in place. And honestly, I feel like there will be time in the next 60 days that some dealers might just put the sold out sign on the door because of the risk of carrying inventory. So it's important to make your plan. And I'll maybe throw a question back to you. It seems like there's a lot of grain in farmers' bins right now, and they're trying to make the decision cash flow wise. What do I do? Do I sell now and use that money to buy inputs? Tough decision.
Yeah, it is. It is. And it obviously we've all been getting beat up here for, depending on how far back you want to go, but definitely since the fall. And, unfortunately, in a way, everyone's waiting for the same event to happen to rally prices, which is a weather scare of some sort or a weather event in the spring. And we have to get there yet. Like, it's the end of January here as we're recording of 2024. So we have to get there. And it's a tough market. If it were me, I would kind of separate out the decisions a little bit, where I would generate my cash, get some sales on, and if possible on the commodity, I would just visit re-ownership strategies. And again, folks, seek out the advice of a professional on this, but there are ways to generate that cash, clean out those bins, and still participate in a market that you may view as bullish down the road. But James, I don't like the scenario for the next 6 weeks here, maybe longer. Like I view this market as being in a bearish trend that maybe accelerates a little bit yet over the next little while, because I do see farms that need to generate cash and do need to get some of those bins cleaned out. So there's going to be more sellers, and I just don't know what's going to be bullish right now for us. So yeah. Anything else? Any final thoughts for us today on fertilizer markets?
I'll give my prognostication. I think I said urea, I think will sell between $775 and $800 by spring. I do think phosphates go over $1,200 per metric ton for spring pickup prices. Potash and lots of supply there, and just trending sideways. It has a 6 in front of it, and sulfates have a 5 in front of it. If nitrogen really takes off, that'll drag sulfur higher, just strictly due to the nitrogen content there. So all in all, I think there's some value into buying today and not waiting till spring.
Perfect. Well, we appreciate your candid answers, talking about some of the big factors influencing price, talking about price and price direction. Appreciate you being upfront with all that. So, James, thanks so much for joining the What the Futures podcast today. I hope to have you back here in the near future. Maybe in a couple months we can talk about how everything's lined up for fantastic logistics for the spring or something like that. But or maybe a big grain price rally. But yeah, thanks for joining us. And we'll certainly talk to you again real soon. Have a great winter here, and the best getting all your fertilizer in place.
Great. Thanks for having me again.
Well, that was great to have James on the show. I'm assuming if you have yet to make your fertilizer decisions, you're probably going to play that one through a couple of times. Just a pile of information there, great information. And looks like it's time, if you haven't already, it's time to commit to some fertilizer purchases here sooner than later. So we'll see if we can get James on again in a couple months here and just give us another refresh or a recap. And I tell you what piques my interest is that correction after seeding. That's a normal, I'd say a normal correction where prices decline. But I'll be very curious because folks that know me know that I like to watch the fertilizer market, and I like to give my opinion on when to buy or to consider buying some tonnage. So I'll be watching that very, very closely. All right, last guest of today. Of course, I am super thrilled to have Ag i3 as a sponsor of the show. And for this week, I had the pleasure of having John join me. So we'll take it away here, John. All right, folks, I've got John Devos with Ag i3 joining me on the What the Futures podcast. Welcome to the show, John. How are you doing today?
Very good. How are you?
I'm doing good. I got the barbecue fired up today, so it's nice and warm here. I haven't been able to barbecue for a few weeks, so excited about that. Yeah, thanks for joining the show, man. I would like, if you could, why don't you do a little intro of yourself and what you're up to?
Sure. So John DeVos, the director at Ag i3, director of the sales and distribution here. My background, I come from farming background, grew up on a mixed farm in Manitoba, and been working in the industry with the line companies for basically ever since university. So it's over 20 years now.
Yeah.
Just recently end of November, I saw this little company called Ag i3 coming to life, and had a look at what they're into, what they're offering, and it intrigued me. And I find in terms of what I see in the market, there's some issues in terms of what growers, the options that they have for managing the risks on their farm, and it's something that I find interesting for whatever reason. And I just figured it was time for a change, so I came on board, and I've been really impressed with what I've seen here since I came on board. So
awesome. Well, you're a farmer, right? So you feel it every day about what feels good on the risk management side, what doesn't feel good, and obviously there's a gap in your bones here, and you're coming to help fill that gap. So that's great. Let's talk a little bit more about Ag i3 for a second. Like, we're seeing more and more about Ag i3 out there. What's going on? Like, what can you tell us about it today?
Ag i3, it's a enterprise risk management company with a platform that's focused on delivering crop insurance in a new and novel way. So AI is kind of the big word these days, and it does use some of the latest technology in the modeling and stuff like that. So growers can see for themselves when they jump on board. It's, we got a platform where they can see their farm and the fields around it, and they can basically just pick their fields and pick their crop plan, put their crop plan in, and click to the, get a quote screen, and right then and there you can get a quote on what your, insurance rates would be for different coverage levels and different dollar amounts. So it's a very slick way to basically get another option, which guys are looking for, on how to protect their crop for, whatever Mother Nature throws at you for causing damage to your yields. So I'd also add, I think, important for folks to understand is, a key partner for us is Definity Financial. So none of this is really possible unless you have a solid backer, and Definity is one of the oldest and largest property casualty insurers in Canada. So they're a key partner. Folks might know them by the Economical or Sonnet brands in the marketplace. So
okay,
yeah, that's
awesome.
It's great. Yeah.
So from an insurance perspective, risk management perspective, it's end of January here. Is there anything farmers could be doing right now?
Yeah. So, it's a great time for planning, right? I mean, we're over the Christmas rush and New Year's and that, and it's cold outside. I mean, it's a bit warmer today, but it's a good time to, get through the paperwork and the books and the planning and looking ahead. What's the crop prices? What's the, what crops are going to pay the bills for the coming year, and how do I plan for that? So,
yep.
Excellent time to be having conversations. What we find for us is, we're trying to get our name out there, try to understand or have growers understand who we are and what we offer. And so we've been, going to the trade shows. We just came off of Ag Days, and we're gearing up for Crop Connect and Farming Smarter. So, we try to hit as many as we can and just talk to as many growers as we can. So just getting the word out right now.
Sounds good. And if a grower wants to get a hold of you, what's the best way they can do that?
They can shoot me an email, john.devos@agi3.ai, or they can just go to our webpage, and there's a contact us form there. So very easy.
Fantastic. Well, I appreciate you joining me today, John, giving us a little bit of an overview on what's going on with Agi3. I've got my Agi3 hat on as well today. Agi3 coming on board as a sponsor to the What the Futures podcast. So excited to have the whole team there. And of course, John, we work together a little bit. I dabble with Agi3 as well on a day-to-day level. So thanks for joining me, sir. And we will certainly stay in touch. I've got a lot more Agi3 content coming in the near future. So thanks for joining us, man. Take care.
Thanks, Ryan. Catch you later.
So that does it for this week, folks. Episode 12 in the can. I hope everybody has a great weekend. I'm actually going to get a little recording done here on Saturday. I have Christy Friesen from Rebellion Farms joining me tomorrow, Saturday. We're going to talk about what you go through when a grain company or whoever has bought your grain doesn't pay you in a timely fashion. We're going to hash that out here, and I'll put that out as a special episode in the next week or so. But that's it, folks, for this week. Stay safe out there. I'm out.